ser en parte presencial por parte de Leslie y en parte virtual. Así que nuestra siguiente presentación habla sobre los inversionistas del sector privado, sus tipos, motivaciones, estructuras de transacción y recursos, ¿verdad? O sea, si Nick dio un panorama de lo fragmentado que está el mercado, Leslie nos va a enseñar cómo aprovechar al sector privado. I'm saying you're gonna pick up the enthusiasm with the private sector investors.
Hopefully you're not getting sick of my comments. So, this one segment, or this presentation, is broken into two pieces. It was designed to help provide background and examples on the kinds of private investments that you can consider for RED funding. So I'm going to go over the types of private investors that could be providing capital to your national RED programs, as well as an explanation of some of the investment instruments that they use. And then Duncan from IDB will give some examples of how IDB has promoted private sector investment. So he's going to be on Skype, assuming it all works.
We're calling him now. So.
You're calling him now, great.
He wants to hear yours.
Good, great. Can I start or should I wait? Should I wait for Duncan to get piped in from DC?
I'm here, I can hear.
Hi, Duncan. Oh, I feel like it's very strange. Well, everybody, can he hear us? He can. You can hear us, right? Can you guys all say hi to Duncan? Hi. All right, Duncan, you'll get a formal introduction from Hector later. So, okay, great. Well, I will jump in so I leave enough time for the man from the sky, Duncan, to talk to us too. And so looking at potential funding sources for RED, and some of these Charlie went over yesterday, sort of the broad spectrum of different funding sources. This is money that could come and help you pay for your RED program. I'm only going to focus on the ones in red, because those are the private types of sources of funds that can come in. So I'll talk a bit about the multilateral and national development banks. Now you're going to say, well, that's not a private source. It's public. Well, it is public, but I've split it off into the parts of the development banks which are commercially oriented, because they act like private investors. So I didn't want to leave them out, because oftentimes when you think about public sources, they're not a commercial transaction terms. We've got private financial institutions, which is a sort of general clump, private equity investors. We have the companies out there that are sourcing agriculture and forest products that we hope are doing that through sustainable practices, as well as those that buy emission reductions. We heard a little bit from Nick on some of the ones that fall into that category. And we have the capital markets as a source of funds. My talk is primarily focused on those kind of private entities who can give money up front, not necessarily those that might be buying your products along the way, although sometimes there's a little gray line there. So, because sometimes those who buy your products in the end are also the ones that could give you some money up front. But mostly keep the word investment in mind, meaning they're going to give you something, hopefully in return for something later. So, I'm going to go through each of these in a little bit of detail. Who are DFIs? Ironically, I didn't even know 3 years ago what this acronym DFI stood for, and now we have done 2 transactions with a DFI, so there is hope. The large internationally focused DFIs, development finance institutions, examples include OPIC, which is the US DFI, IFC, which is the World Bank, a privately oriented DFI, and then Dutch FMO. There's many others. Each country has some, and then we also have some regional DFIs like the IDB or the AFDB, And then, of course, there are also national development banks. Their typical instruments are providing loans, guaranteeing loans, and we're going to talk a little bit about these at the end. Making fund investments. Sometimes they are taking first loss provisions in funds. Sometimes they're willing to be the most risky investor in a fund. They provide political risk insurance, which Tiago had brought up something about that yesterday, I think. Some of them do equity, not too many, but some do equity investments. And at a very high level, their investments, while commercial, meaning they have to see some ability for return, not always a market-based return, but some ability for return, they have to have a development outcome. They generally want their capital back as a main priority. They're not necessarily looking for 10, 20, 15, 15% return. And their transaction sizes, for most of the sort of international or regional, their transaction sizes are fairly large, which for a national program may not be an issue if the funding is coming in to a large set of sub-programs. But for smaller kinds of projects that are looking for funding, oftentimes this is a barrier. So DFIs. Then we have a bucket which we didn't quite call banks because it's not always banks, but it's sort of private financial institutions. But really who we're talking about generally are commercial banks, investment banks. Some microfinance institutions might fall into this category. They're a little hard sometimes to categorize. And sometimes these would also include, sort of specific credit lines that are also run through national development banks. But what do these private financial institutions tend to do? They tend to do loans as well. They might actually do bond structuring, where structuring and then placement. Think of Citibank. Well, Citibank may never give you a loan, but they'd be happy to charge you a lot to help you issue a bond and then to sell it to their investors. That's what we mean by that. They'll do leasing agreements sometimes. Sometimes they do factoring on invoices, trust management. So if you're setting up a trust, we heard from Peru that they have a trust structure. You have to have a trustee to manage that. They can do that kind of work. And they may, if that trust has to secure certain revenue streams, they may be able to guarantee those revenue streams. Some more sort of motivations and conditions for them, these types of investors. Some of them have real money to invest, like real, I can write you a check kind of money. Others may just have just have guarantee lines or services, like the placement services or trust services. So sometimes when you're talking to them, you need to find out if they actually really have money to give you versus other financial products, which may help you get somebody else's money. So, there are some interesting examples of banks at a local level that often have some really interesting products that are designed for smallholders. We have someone from Occidente here that's done a great product for rubber loans. She just walked back in the door. But there are at the local level, and sometimes they are sort of quasi-government entities as well. So Tera, for example, in Colombia, it sort of acts like a bank. It's partly government. So it's sometimes not really easy, but important thing is ask them the questions. Do you have any money? Like, what are your products? There's no harm in asking that. Because these are the entities that if you want to bring private funds in, you're going to need to start feeling comfortable figuring out who they are, how to access them. What kind of support do you need to make sure you're comfortable doing that? Private equity investors. These are the most expensive investors you can get, those people that want to take an equity stake. But they take risks, and they'll take risks that most banks won't. They'll take risks that other financial institutions won't. So they do serve a purpose in bringing funds to projects and to programs, and it covers a really broad spectrum. This is sort of private equity funds, impact funds that include foundations and endowments. It could include large institutional investors that have allocations to frontier private equity, which is the riskiest. But many institutional investors don't go that far down the risk curve. They could be also individual investors. Those, it's quite possible that Carlos Slim could, write a check in Mexico. I mean, seriously, not really, but it's, you can get rich people that are actually fall into this category. And then again, I sort of put the old microfinance entities because they sometimes make equity investments. The typical investments that fall into this source of funds are equity, convertible loans. Convertible loan is they have a bond and they can actually convert it to equity. So there's an upside there besides just getting principal and interest. And then I also put in this category prepaid ERPAs. I'm going to do a quick thing on ERPAs, and then we have in a little bit, maybe next, I'm not sure it's coming up, Tiago's going to talk about a whole session on ERPAs and how do you negotiate ERPAs and what are the terms of ERPAs. But a prepaid ERPA falls into the equity camp. And what are their motivations? Some of them, all they care about is making money. A lot of them. Others, they want to, believe it or not, when you talk to some of the what's called PRI or program-related investment, usually they're endowments and foundations, they want to do good and they want to get their money back so they can do good with somebody else. So sometimes when you're talking to investors that are equity investors, one guy's willing to take a lot of risk and is not as worried about principal. The other guys, I've talked to potential equity investors who have said, oh, that's way too much return. We don't need to make that kind of return. We can't be doing good if we're making that big kind of a return. But we want to get our principal back. Okay, so this bucket is you can have different heads on the monster of the, private equity investor. A lot of times they don't want to give all their money up front. Maybe they say they'll invest $10 million in your program. They're going to make you work for it. So they're going to make you, they're going to give you $500,000 to get to this milestone, $2 million to get to this milestone. But those milestones can be structured to pay for the things that you need to do over the course of a 1, 2, or 3 year period. Because they don't want to just write the $10 million check and hope that the milestones that will promote the success of the program are going to happen. So you'll see that quite frequently with equity investments. They also have oftentimes ask for what's called management step-in rights. That means that if you don't perform, they can come in and put their own people in place. Very interesting thing to think about when you put that in the context of what Tiago was talking about how an investable entity is structured. If you have an investable entity that by the way it's regulated requires government control and no ability to have any management step in, you may be at a disadvantage with some investors. This is usually in the case where there is a real disaster, but it's a common clause. And then they're motivated because they want to invest in your program because it's going to diversify. And in fact, we've been trying in the US to attract private equity money to the red sector for a lot of the the university endowments who have had the kids on campus, the students on campus, say they have to divest from fossil fuel. So we're trying to make the argument, well, you're not going to get rid of all your fossil fuel investments. So why don't you invest in red? Because it's like an investment offset. We haven't gotten that far with it, but it'll come in time. And that's sort of a pool of potential private equity investors. This is the sort of been looked at, or is still being looked at as the holy grail of private investment, but in reality, I'm not sure it is, but I'd like to figure it out. So these are companies like a Unilever, Mars, you can name them all, right, that have said they will source zero deforestation commodities. And so they're working through TFA and roundtables, all of which is great. But have they actually written a check to invest in anything? Some probably have. They probably have invested in some of the supply chain infrastructure or providing inputs to smallholders. So I don't want to say that they're not an important potential source of capital, but they're not necessarily a financial investor. They're investing to secure their supply chain, which is good. It's important. And sort of another part of these is those who do this and might buy emission reductions or those that just buy emission reductions. So before, years ago when there was some hope of compliance offsets for red, although Nick's right, I'm optimistic. There's still some hope. But there would be investors who would, companies who were in this sort of area here, who offset, they were voluntarily offsetting, but they also were trying to make money, and they would actually provide money up front to get offsets. So they weren't, there's kind of a company that's in the supply chain, and they're kind of a private equity investor. What do these guys do? We hope they give long-term purchase agreements. So if you have an area that's producing measured and verified zero deforestation commodities, then they should come in, they meaning the buyers should come in and give those growers, those producers, multiple year contracts. Because once there's a multiple year contract, they can go to the bank and get a loan. So all these things sort of fit together. They also, as I said, gave examples. They provide technical assistance for increased yield or more effective processing. They also could, as I said, do an IRPA with or without prepayment. And they come in many flavors. When people say private sector, half the time they're thinking of these guys, half the time they're thinking about the slide before or the slide before. So I only encourage those people, when you use the word private sector, to please tell us which part of the private sector you're talking about. It makes communication so much easier. I don't sometimes. Capital markets, so you can't leave off the capital markets, but there's not that many countries that are active in red that will likely be able to access this source of funds. These are capital markets, equity markets, bond markets, and there are some countries that have relatively developed capital markets compliance, regulation, and decent-sized domestic institutional investors. The typical instruments you'll see in the capital markets are equity, public equity issuance. It may include fund issuance, public fund issuance, but public equity issuance, municipal corporate bond issuance, or issuance from one of our famous investable entities, because there's many places in which you can do it, but basically equity and bonds. And the motivations for the capital markets investors, those are the people that are going to buy the equity or buy the debt. Their motivations are they want to generate financial returns. That's their job as an institutional investor. They want to diversify their risk, which is why our sector is so great, because it's not related to anything other investment out there. They want to hold regulated assets. What I mean by that is that many institutional investors may not have a mandate to do a private investment, i.e. just a bilateral investment, because their investment requirements say they have to hold public instruments. So in this case, they could only access or provide finance through a regulated capital market. They also may believe that these capital markets provide greater liquidity. I say may believe because anybody that's looked at the London AIM market knows that it's not always more liquid, but there is truth to the fact that regulated markets provide at least a formal way to access, to be able to sell your investment. And I just put an arbitrary number here. Deal sizes are generally pretty large. I put an arbitrary number of 25 million. I'm sure someone can find one that's lower and find places that's never been higher. So that's the suite of, sort of private investors and sources of funds. So I'm going to go through quickly 3 types of financial instruments. We talked about each one of them, but let's talk a little bit more about it. So if you're going to have somebody make an equity investment in your RED program, what does that mean? Well, they're going to give you some money. They're going to want to know exactly what they're investing in. So just giving you money and you're going to spend it on the administration of your program, and they have no way to tell how they're going to get a return for that money, you're never going to get their check. What are they expecting? They're expecting that you'll pay a percentage of future profits, either through dividends or some form of monetary compensation. They'll want their investment to gain value over time, and they'll want to figure out, how do I get out of this? So I think very typical for equity investments, private equity investments, will be that they'll ask for a put option back, meaning they may ask you, we'll invest, but we want to be able to sell in 10 years after we've made our money and you're doing great and your program's financially sustainable. We want to put our investment back to you at a price. So these are just examples. Tiago gave a great example of when the equity value is determined, it has to include all the sweat equity that you as a government or your implementing partners and any assets. So Tiago was talking about, somebody asked a question about, well, how much is the Acre company worth? Well, right now there's no outside investment. So it's only worth what assets the government's put into that. And that's where he brought up the question about, well, we have to get it valued because if we go out to get equity investors and we want to try to raise $50 million and we only want to give away 49%, we better show that we have put in more than $50 million worth of value. So that's a kind of example. And equity investors are always junior to just about anybody else, meaning they're the last guys to get their money back if things go bad. So that's what we mean by junior. And again, they have step-in rights usually. IRPA, I'm only going to do one quick slide on IRPA because you're going to have enough IRPA to be IRPA'd out. So what are the main characteristics of IRPA's contracts? Sort of the three typical types are called spot, a forward purchase agreement, and a prepaid forward agreement. Spot is you pay for something now that is ready to be delivered right away. And that's it, you've done, that's all. A forward is you make an agreement that I'm going to sell to Jacinto my carbon credits for the next 10 years, and he's going to pay me $10 a ton because he's a good buyer. And he only pays me when I deliver. So I get no money from him in the beginning, but he's going to pay me every time I deliver, he's going to pay me $10 a ton. And then the prepaid is Jacinto decides, you know what, I got a big check. He's going to give $5 million up front, and then after we deliver the tons to cover the $5 million, he's also going to buy additional years. So these are just the kinds of structures, and I know Tiago will go into some more detail on how some of the terms of IRPAs work. But when it comes to prepayments, which is the way you can get upfront investment, Nora's given me 5 minutes, man. That's the first time anybody got timed out.
That's not true.
It's not? I guess actually, Tiago, are you going to cover some of the sort of prepaid things in your slide about prepaid and the fact that usually they're the first guys to get the credits back? Well, if not, okay. Perfect. So we won't cover that. So we have 2 more slides in 5 minutes. The next is just a really quick slide on loans. I think most people are familiar with loans because we do it in our daily life. We have a credit card. That's effectively a loan, right? So loans are, money is provided. There's generally an interest rate, fixed or floating interest rate, and then you have to pay the money back at some pre-agreed time. It's less risky than equity because if you go bankrupt, they get paid before equity gets anything. And there also can be different tranches, what we call tranches of loans, which refers to the order they get paid in bankruptcy. So the junior loan is the one that gets paid last. It gets paid before equity, but it gets paid last. Senior, they're the first ones. So in some sort of bankruptcy, however much money's left, it starts senior, then it goes to mezzanine, and then to junior. For red, getting a loan when you have an IRPA with the World Bank should be easy. That's what we hope. If the World Bank's going to buy 50 million tons or $50 million worth of emission reductions from you, we hope that both a loan as well as equity is something, if you need money up front, that should be a way you should get it. We talked about loan products for small holders. Loans can be done in public-private partnership structures, and loan guarantees are a really important complement to loans. So, last thing, I think the part of this slide that's most important, well, first, I don't think equity in many countries is an option, public equity. It may be, but Probably not so. However, a green bond issuance, I just put the name green bond because everybody's talking about green bonds, green bonds, green bonds, green bonds. So in this particular case, a municipality or an investable entity, special purpose vehicle, would have a business with cash flow. If they wanted to try to get money up front, they could actually do a public issuance of a bond. Call it something nice like a green bond. And the bond's principal and interest is repaid from the revenue that's coming in. So we've started to talk to a couple governments about whether or not this kind of structure in their country is a good structure. One of the things that's necessary is the regulations must be in place, and you have to have institutional buyers in that country that would buy a green bond. Because if there are no buyers, there's no sense to issue a bond. But that's how you can get money. That's an example. And it could be a bond that's a general obligation of the issuing entity, or it could be for a specific project. So project meaning you could group together those sub-programs and they're all around sustainable production of coffee or something of that nature. So you could do either of those. And last, this just shows you when you start thinking about what's called building a capital structure, how do you use the different sources of funds and different instruments? They interact with each other. I already mentioned the fact that if you have an ERPA contract or a long-term commodity purchase agreement, you're going to lower the risk for any equity investor or lender. So get that, and you likely get that, or you more easily get that. Loans as part of your finance means if you need $10 million, you get a loan for $8 million. You only need $2 million in equity. It means the return for the equity investor is higher. So each of these kinds of financial instruments have an interaction to play in your capital structure. So hopefully that got you thinking. I'm sure it's not the first thing on your minds in doing what you do for your job, but those are the kinds of financing, private sector financing schemes and instruments. So thank you. And Duncan, are you still there?
Yes, sir. You're muted.
Let's see there. We can hear you, but it's a little bit like a 747 is flying overhead.
Okay. What I'm going to do is turn off my speakers so I don't get the reverb.
Okay, great.
I won't be able to hear you, but I'm just going to assume that it's working okay. And if there's a problem, Emma, will you send me a little chat? Yeah.
Okay, and just let me know when you want me to switch your slide, okay? We're just going to get your slide up now. Thanks, Jimmy.
Okay, so hello everyone. My name is Duncan Gromko, and I'm sorry that I wasn't able to attend. I hope that logistically this works out okay. And I'd say that, well, I don't know how questions will go afterwards, but if you'd like to follow up, I'll provide my email at the end of the presentation, and I'm happy to speak to anyone. My presentation is going to be about a program that we have here at the IDB for mainstreaming ecosystem services and lessons that might be learned for Red Plus from that program. Next slide, please. So just an overview of the presentation. I'm going to give an introduction to SCF, Structured and Corporate Finance, which is the department that I work for in the IDB. I'll talk about how we use grants to develop projects. And then last, I'll talk about concessional loan funds that we use to support projects. Next slide. So there are 4 private sector lending windows of the IDB, and I'll just give a quick overview of them to explain the different ways that we work with the private sector. The first is Structured and Corporate Finance Department. That's the department that I work in. It's by far the largest of the 4 windows. It tends to work with very large banks and companies in Latin America. Leslie was talking about a challenge being smaller loan sizes, and that's definitely a challenge for us, where typically our minimum loan size is around 20 million, so we're talking about larger investments. Within SCF, we have 3 lending windows. One is for infrastructure. A second is for normal sort of companies. And then a third is for financial markets. And that division lends to banks. I want to highlight that because lending to banks who then lend to smaller businesses is a good strategy for us in order to reach smaller businesses that can't necessarily take a large loan like $20 million. We can lend to the company who can then make many smaller loans to smaller companies. The other three windows, I'll go through them a little quicker. The Inter-American Investment Corporation, they do loans that are a little bit smaller than SCF, and they can also make the equity investments that Leslie was talking about. The Multilateral Investment Fund they operate primarily with grant resources that they give to small and medium-sized enterprises. This is for technical assistance in kind of building the capacity of businesses. And then the last is Opportunities for the Majority, and they do lending primarily with banks targeted to the base of the pyramid. I'm happy to follow up with any questions on those different windows if that's helpful later. Next slide, please. So we should be on the profit slide, and I just want to say, Leslie was touching on this in her presentation, but a key driver for our department is that we typically lend at interest rates that are similar to what companies would find on the commercial market. And the idea behind this is that we don't want to crowd out private sector investment. It's an important component to what we do. I think it requires an extra level of, say, rigor to the investments that we make, and it ensures that investments we make are financially sustainable. However, it also makes it challenging to finance innovative projects like, say, a RED project or, in general, land use projects. And actually, I want to talk about, use this opportunity to talk about a number of other difficulties that we have, barriers that we have to investing in RED Plus or generally land use. So one is the profit barrier. Any investment we make has to be generating returns. A second is a size barrier. As I mentioned, normally we tend to lend at around $20 million or more, and typically investments in forestry or say climate smart agriculture tend to be smaller scale investments. Third is the longer term payoff that is typically found in investments in forestry or agriculture. So if we wanted to make an investment, say in a company that does plantation forestry, the challenge is that if they plant the trees today and optimistically 8 to 10 years from now, they won't be having any cash flow until the trees are harvested. And that's not the way that banks like to receive their payments. They like to, maybe they can offer a year or two of grace period, but it's difficult or really impossible for a bank to offer a loan with a grace period of 10 years. So that's another obstacle. And then the last obstacle I'd say is just a lack of familiarity, both within our team, because of these other obstacles I've named. We don't have a lot of experience in RED Plus and land use sectors. And then also I'd say there's a general lack of familiarity on the other side, where the clients that we do try to talk to and develop, that they don't know how to sort of pitch to us and explain to us what we need to hear. But the rest of my presentation, and next slide, the rest of my presentation is about how we try to address those barriers in the team that I work on. So this slide is how we sort of view the development of innovative technologies and businesses. And innovative technology might start on the bottom of the pyramid, where it's not eligible for commercial financing. The most appropriate way to support this sort of technology or business would be through government policy or grants. The top level on the pyramid, private sector investment, is where ultimately we want to see these technologies end up. But my team works in the middle three levels. And so what we're trying to do is move technologies and businesses that are at that bottom level up to the level where they're capable of being invested in by a commercial entity. And I'm going to focus on the second and third levels, the subvenciones para análisis de viabilidad y financiamiento concesional, because my team specifically works in those two areas. Next slide. And actually, sorry, skip 2 slides. Skip forward to the upside down triangle again. So right now I'm going to talk about the second level of the triangle, which is grants that we use for feasibility studies. Next slide. And I hope that we're on the slide that says businesses impact nature and businesses depend on nature. So my team has developed a tool called an ecosystem services appraisal, and this is, like I was talking about, a tool that we use to assess the feasibility of different investments. A key aspect of this appraisal is that it monetizes a company's impact and dependency on ecosystem services. The idea behind that is that by monetizing a business's dependency on ecosystem services, you can help them to incorporate the environment into business decision making. Another important part of the appraisal is that it looks at different investment scenarios. So a company might be considering investments X, Y, or Z, and we can do a cost-benefit analysis for each one of those 3 scenarios so that the company can compare payoffs between the 3 scenarios. The whole idea behind this appraisal is that it's helping to identify an overlap between businesses' financial interest and environmental interest. Because as I said before, we're really only making investments where there is profit generation from the business. So if we're going to make an investment in the environment, there has to be some sort of business motivation for the company as well. I realize that's a little bit abstract, so I hope that I'll explain it better with my next slide on Montes del Plata, which is the first ecosystem services appraisal that we're conducting. Montes del Plata is a large pulp and paper company in Uruguay. The IDB made a $200 million investment in the company as a part of a larger $2 billion investment that was primarily for a large processing plant that the company has now recently opened. What my team was doing, we were working. So Montes del Plata has a number of small landowners that have cattle ranching operations in and around Montes del Plata's operations, their plantations. There's a little bit of tension sometimes between these landowners and the company because the company is seen as competing for land. Recently, the company has thought about creating a productive integration program which would help to integrate the ranchers into the supply chain, meaning that the ranchers would grow eucalyptus in addition to raising cattle on their land. So hopefully the ranchers would like this because they'd have an additional source of income, and it's good for the company too because they have a broader supply chain. What our appraisal is doing is helping Montes del Plata look at different options for this productive integration program. And particularly what we're trying to do is get them to consider silvopastoral models of production. So probably all of you are familiar, but the idea here would be that eucalyptus is planted at low density on land that was formerly used for cattle ranching, but it's planted at a density so that cattle production can continue on the land. And so that there'd be environmental benefits in terms of added carbon sequestration from the eucalyptus planting, and you'd also see, like I talked before, added benefits for the farmers and for the company. So next slide, please. I'll talk about another example of an ecosystem services appraisal that we're doing. We're working with a bottling company in Central America, and they're faced with predicted investment costs to maintain water quality levels. in order to maintain their water quality, they have to make investments in water treatment facilities. What we want them to consider is how they can invest instead in reforestation in the watershed that feeds their bottling facilities. And the idea is that the reforestation would achieve the same levels of water quality that the water treatment facility would. What our appraisal will do is essentially look at the cost and benefits of, like I said, different investment options. So an option where they have solely the water treatment facility, an option where they have watershed reforestation, and then maybe a third option, a middle ground, where you have a combination of the two. And essentially what we're doing is we're trying to scope out this investment idea for the company. Next slide, please. As I mentioned before, an important tool for us in working in the land use sector is lending through financial intermediaries. The way that my team works with financial intermediaries, with banks, is that we provide market studies to the bank to develop a credit line around a particular green investment area. And if you advance to the next slide, I'll talk about a specific example. So we're working with a bank in Honduras that currently has a large portfolio in coffee, but they're interested in expanding to producers to make investments in organic cocoa and specifically certification of organic cocoa. Now, the bank doesn't have very much experience, actually zero experience lending to cocoa producers. So the market study that we're providing will help the bank to define the terms and conditions that they lend to the cocoa producers and assess sort of what is the market demand for this kind of loan product. I hope that's a general overview of the grant products that we provide, but generally I hope that what you understand, the idea is to help move green investments forward by providing sort of the business case for the green investment. Can you actually skip 2 slides forward to again, the inverted pyramid or triangle? I'm now going to talk about the middle level of the triangle, which is concessional financing from donors. This is a very important tool for us because a lot of the projects that we're looking at, they're not quite viable from a private sector investment perspective, but they still do generate some returns. And so we think that by providing them concessional funds, we can help them, as I talked about before, move up that chain of development from just an innovative technology to something that's ready for commercial financing. Next slide. So the Canadian Climate Fund, or C2F, is a $250 million fund from the Canadian government that's managed by our unit. It invests in projects that have a climate change mitigation or adaptation benefit. It's meant to be a co-investor to IDB projects, meaning that it can make a loan on any investment that the IDB has a loan. And it can offer interest rates that are much below market rate, and it can also offer guarantees, meaning that it would take away the risk from the IDB. It helps us to make more risky investments. I would say that even with this tool, I want to point out that we've had difficulty making forestry investments because of what I was talking about earlier, which is the long-term payoff period for most forestry investments. Next slide. That said, we do have a good example of a climate change adaptation project that we financed through the Canadian Climate Fund. We've given a loan to a coffee trader in Central America. As I'm sure many of you know much better than me, Central American producers have been hurt by La Roya, which is in part exacerbated by climate change. And so the loan is to the coffee trader, and the coffee trader then makes smaller loans to coffee producers for renovation of coffee plantation and improved farm management practices. I mentioned earlier that working through banks is an important strategy for us to reach small producers, but I just want to point out that we can also use other intermediaries such as traders to reach smaller producers as well. Next slide, please. So we have a new fund that we're very excited about, which is a smaller fund, a $5 million Climate Smart Agriculture Fund from the Global Environmental Facility. It's $5 million for now. It's in a pilot phase and it might be scaled up. An important difference between this GEF Climate Smart Ag Fund and the Canadian fund is that the GEF fund can lend all on its own, so IDB resources don't have to be involved, and that means that we can make much smaller investments on the order of $500,000 to $2 million. So it's still probably much too big for some smaller producers, but we're able to move down levels a little bit. Investments in climate smart agriculture, that means that we're looking for investments that either have a climate change mitigation or adaptation component and simultaneously improve productivity. So we're talking about agroforestry, water efficiency. We've actually had a lot of interest in investments in drip irrigation, silvopastoral models, no-till agriculture, that sort of thing. And I'd say it's important to say that we can, this fund and the Canadian fund can be combined with what I was talking about earlier with feasibility analysis. So for example, with the bottling company in Central America that's considering reforestation, once we assess the feasibility of this analysis, the company is interested in concessional financing for actually making the investment. And what they're interested in here is a performance guarantee. What that means is they're worried that if they make this investment in watershed reforestation, that it won't achieve the water quality goals that basically our analysis says it will. Well, we can offer them a performance guarantee through the Climate Smart Agriculture Fund so that if there is issue with performance, that the guarantee then takes the first loss on that lack of performance. Next slide, please. And so I'm wrapping up here. I want to sum up by saying that our unit and our department, what we're really focused on is finding the overlap between business interest and environmental interests. And we use both concessional loan funds to make investments, and we use feasibility analysis to test investments that might be innovative or not proven at a commercial scale. But our strategy is to find overlaps between business and environmental interests. I hope that provides some lessons for RED, and I'm happy to answer any questions if that's logistically possible. Thank you.
Thank you so much, Duncan. And we are a little bit more than a little behind schedule. So anybody that wants to ask Duncan questions of all these quite important products that could become part of your overall capital structure for RED, it's duncang@idb.org.
Yeah, it's on the last slide, actually.
Yeah, everybody's writing it down.
Okay, great.
You're going to be flooded with emails.
Okay.
So thank you so much, and so we're so happy the technology worked, that we could hear you very well.
I'm going to sign off if that's okay.
Thank you, bye-bye.
Okay,
Hector?
Bueno, ya Leslie, muchas gracias. Un aplauso para Duncan, tal vez nos escucha en Washington. Y para Leslie, estamos un poco atrasados, vamos a salir a almorzar en este momento. Les pediría yo que nos tomemos máximo 30 minutos. El almuerzo va a ser en la pérgola, aquí afuera del restaurante, ¿verdad? O sea, nos vamos al restaurante, pero nos salimos hasta la pérgola. Y en la tarde vamos a tratar de eliminar el